Good afternoon, everybody. It is now Thursday, May 26th. It's been about 2 weeks since I last did one of these videos, and we've had a lot happen in the intervening 2 weeks. We had the markets, of course, all over the place. I had my first Raymond James National Conference in about 3 years. It was down in Nashville, so went down for that. It was awesome to get together with everybody from the home office and other people around the country that I love spending time with. And I also celebrated my 10-year anniversary, which is really significant milestone for my wife and I. So overall, despite what's happened in the markets, it's actually been a really good couple weeks. However, I want to answer a question I've been getting a lot lately. I've been hearing a lot from clients, getting this question a lot. What happens if we go into a recession? Now, my answer with that is a little bit contrary to what the general consensus is right now. My answer is we actually may already be in a recession. Consensus is maybe we have a recession at the very end of the year or early next year. I think we could probably be in a recession right now. We had the first quarter. Well, first let's talk about what a recession is. A recession is just simply defined as 2 quarters of economic contraction. So 2 quarters where the growth is essentially negative. We had a surprise contraction in Q1 of this year, so January basically to March, and that was announced. I think the economy shrunk by, going off the top of my head here, but I think about 1.2%. People weren't expecting that. We're going to find out probably in July at some point what the economy did now in the second quarter. I would not be surprised if we have another contraction. That means, by definition, we may very well be in a recession right now and not know it till July. So what does that mean to the markets? Historically, now the future never looks exactly like the past, but sometimes it can rhyme. Historically, before a recession, the market starts to decline about 6 months before it's actually stated that we are in a recession. You know, if we find out in July that we're in a recession right now, markets start going down in January, that kind of makes sense. Your average decline is usually about 24% for the S&P 500. In this case, we touched down about 20% last week for the S&P. The NASDAQ was down about 30%. So again, it's kind of right in there. These average declines take about 5 to 8 months. It's now the middle of the end of May. We're almost 6 months into this thing right now. So my answer is, if we are in a recession right now, I think it's really possible that we might be. The market's already kind of given us an indication that could be the case right now. Usually by the time it's announced we're in a recession, most of the damage has been done for at least the equity markets. And at that point you stabilize. In some cases you can start a new upswing. So I would actually be, if we hear in July that we're in a recession, it kind of rhymes with what's going on, quite frankly, in the equity markets. In terms of that, the other thing that I've said in previous videos is the question has been, are we done yet? Are we done with these declines yet? And my answer has been through the last several months is not yet. And I'm still there, but there's a lot of things now that are starting to look really positive. First is just the magnitude and duration of the move. The NASDAQ at one point was greater than 20% below its 200-day moving average. All you need to know when I say that number is that's a really, really big extended move to the downside. In fact, the last time we saw the NASDAQ that oversold based on that metric was in 2008 and 2009 during the Great Financial Crisis. So that's a really, really big one. S&P traded down to about 3,800, which is an area that should have offered some pretty good support. We've stabilized at least for the last week or so. Maybe we get a little bit of bounce off that. But there's still not everything in place to say that was the bottom. Still a couple boxes that can be checked. So I don't know that it necessarily was, but I think we get some stabilization here. And at the risk of putting myself out there, maybe we even get a somewhat meaningful rally, 3, 5, 6% or so. And as the market continues to digest everything going on over the next month or two, it could retest those lows. But it's feeling a little bit better. The other thing I've said in past videos is we need to see some stabilization in the bond market before equities stop going down. And we've kind of seen that. The Barclays aggregate bond index at one point about a week and a half, 2 weeks ago was down about 11.5%, 12% for the year so far. Now, to give you an idea, we haven't seen a move like that in 40 years. You know, so a really, really massive move. And now you've seen interest rates. Interest rates are starting to come in. 10-year trade up to about 3.2%, 2.7, 2.8% right now. Barclays bond index has rallied a little bit from being down almost 12% to now it's down about 8.5%. So you're seeing rates, at least in the near term, kind of stabilize. And I think that's also a really positive thing. And another really positive thing that's I think we're looking at moving forward is Fed minutes came out from their meeting in May, and Investing world loves to see what the Fed has to say because it gives you some guidance on what they in terms of what they may do in the future. And what they said is in June they're looking at a 50 basis point hike. People were thinking 50, maybe 75 basis points, so kind of in track to being even a little bit more dovish, but also that they may be taking a pause in rate hikes after that to take a look at the situation, see what's going on. So it shows that the Fed has kind of been listening to what's been happening in the markets here in the first quarter. Bond markets under pressure, stock markets around the world under pressure, and I think they're kind of recognizing that a little bit. So these are all pretty good things, but the main question was, what happens if we have a recession? What does that mean for the financial markets? And my answer to that is, I think we already might be in a recession, and I think the market has already priced a lot of that in. But we'll find out in July when those numbers come out. We'll see what the market does over the next few months here. Anyway, you've been with me now for 6 minutes and kind of ramble on a little bit about a lot of different stuff. If there's anything that you'd like me to dive into in greater detail, please call me, call a member of my team. I love talking about this stuff. And also, if any of you have specific questions you want to ask that you feel like it might be useful for me to answer, please let me know, and I'll do my best. Until the next one, take care, everybody, and thank you for listening in.